Okay, next is Insurance Commissioner's Officer presentation. Deputy Commissioner Julia Juarez with the California Department of Insurance will be giving the presentation. Good morning, how are you?
Good morning, Mayor, City Council members, Vice Mayor. It is a pleasure to be here with you on behalf of Insurance Commissioner Ricardo Lara and to everyone in the community. Thank you also for being here and learning about what is happening with insurance. Not very fun coming after the fun department, but I absolutely am grateful for being here just because I know that there's a lot of questions, a lot of angst in the local communities. And so I am delighted to be here. And I want to make sure that you know that you have someone in the department who you can call and talk to. And I also want to introduce Destiny Flores, who's here. She is our local liaison for the city of San Marino. And so she will also be able to, if you have any questions or if you have constituents who come to you asking for assistance, she will be able to be your liaison for that. So without further ado, let me get started. So my name is Julia Juarez. I'm Deputy Commissioner for Community Relations and Outreach for the Department of Insurance. Let's go to the next slide, please. So I just want to give you just a very quick, this almost goes without saying that we know that insurance, as well as everything in our economy, has just gone very, very strained. And so all the global inflation, natural disasters, increased insured losses, and just costs have just made it very difficult for not just for the insurance industry, but everyone. And so we have seen that labor shortages and also materials and supplies, all of that have really been an issue for the insurance companies as all of the costs have gone up. So then as the risks for the insurance markets are contracting, we also see that their insurance companies are trying to do whatever they need to protect themselves. Let's go to the next slide. In California, California is the biggest insurance market in the country. We are we have the biggest market in the country, but we are also only second in the world to China. So so everybody wants to do business in California, but the way that our system is set up, we have the top 12 companies are actually responsible for 85% of the homeowners market in the state. So of course, it's all of the insurance companies that you hear all the commercials for, and everybody just automatically, just goes towards them. Even though we do have over 100 companies in the state who do sell homeowners insurance, and out of those, 7 out of 12 of those have actually paused or restricted business altogether because of their risks, and have also applied for rate increases, have most likely been either approved or they have pending rate increases, and yet that has not been enough. Let's go to the next slide. I just want to show you here the market share for all of these companies. If you see, State Farm has the biggest market share in the state. They did have rate increase approved, but they also did pause new policies. As of yesterday, you might have heard on the news as well that they have asked for a much bigger rate increase now, and so all of those different things are happening within the state, and that is. If you look at the difference between the market share, State Farm is at 21, Farmers at 15, and then everybody else really, really low. So you will most likely hear in the news a lot of the movement is, of course, going to be happening with the top 2 companies. Let's go to the next slide. So what has happened in California is in the last 10 years, we have seen that homeowners insurance companies have really seen big losses. So their loss ratio throughout the country is 59%, California 77, almost 74. Underwriting profit 3.6%, California minus 13.1. Direct profit on insurance transactions throughout the country 4.2, California minus 6.1, and the return on net worth 7% throughout the country, in California 0.8. This was as of last year, January of last year, and so these are the numbers that we are seeing, and why we are hearing from insurance companies as, you know, what are the big issues that they're having. Let's go to the next slide. So how do we get here? The FAIR Plan is the insurance of last resort for the state. When after the Northridge earthquake, we saw that a lot of, actually not the Northridge earthquake, excuse me, in the 60s, after the Watts riots, we saw that a lot of insurance companies were not doing any business in that particular area. So the legislature created the FAIR Plan, asked the insurance companies to come together, put together a pool to cover those homes until they are able to then buy their insurance outside of in the regular market. This was supposed to be a Band-Aid for a couple of months, maybe 3 months or so, while people looked for insurance. And normally that's the way that it has worked in the state. However, since 2017, 2018, we have seen the big losses because of wildfires, and the state, and so then now the FAIR Plan has become one of the biggest insurers, has seen one of the biggest growths, where they are receiving maybe 1,000 applications a day for homeowners insurance. So that is huge. However, still, the FAIR Plan is only 3% of the market, so it is not. It's not as big. However, but it is an issue because people are not able to find insurance. You might hear from some of your constituents who maybe got non-renewed, and so they might have to be going to the FAIR Plan. The FAIR Plan only covers fire insurance, and it is also extremely expensive, because basically everybody that pays in, that is the money that is used to cover the expenses when there is a loss. And so it is very, very expensive, and they still have to purchase a difference in conditions policy from another insurance company. So that is, the FAIR Plan wasn't made to be friendly, wasn't made for you to be there for a long time. But unfortunately, because of this crisis right now, this is where we are. Also, we have seen that the top 12 companies like State Farm and some have been downgraded by AM Best for their outlooks. And we have seen that they are just not writing policies in high fire risk areas, or areas, or are looking for ways for them to basically get rid of some of their market share. And along with that, of course, rate filings are more complex, take longer than 6 months. And then also, when insurance companies apply in the state, when they apply to get increases, to increase their rates, they have to go through this process where we have interveners, and interveners can unreasonably keep them waiting for up to 18 months for them to get that. And so there's a lot more to that. Let's go to the next slide. So Commissioner Lara, hearing from people all over the state about what the biggest issues, and of course the insurance companies telling us that there's way too much risk. Brought everybody together from the state that deals with wildfire, deals with safety, and got everyone together to put together a Safer from Wildfires framework that basically is just protecting your home, protecting your immediate surroundings, and protecting your whole community. If you do all of these things and very specific things, then your insurance company needs to take that into account and then give you a discount in your insurance. What does that mean for San Marino? Let's go to the next slide. It's basically basic stuff, six different things for your home. You can see them here. I'm not going to read all that, but it's just basic things for your specific home. So if your insurance company is telling you that they're not going to they're going to non-renew you. Look at these things that you can do and see if there's, that there are things that you can do specifically for your home. The next, I will let you finish. Thank you. The next slide. The next slide is your immediate surroundings, making sure that we have clear vegetation around the area, just to make sure, normally when there is a fire, even if the fire is not close by, an ember can come all the way down to your area. And if you have something that is out, something that is dead outside, easily can catch fire and then can wreak havoc. So it's basic, your basic surroundings. And then the next slide is your entire community. So basically what that means is that if you build a FireWise community within your area, and FireWise communities can be 8 homes, or above, and you basically make sure that all of your areas are within that community, and you guys, keep everything together, and work together to make sure that if there is someone that cannot clean up their area, everybody comes together and helps with that. The entire community then is able to help each other. Then that becomes part of the entire system of safer communities. And so that in itself will allow you to get a discount for your insurance. So all of these things together work great and can be a big discount. If you only do 1 or 2 or 3, that can also be something that your insurance company can take into consideration. So those are the things. So even if San Marino, there may be some areas in San Marino that are not necessarily wildfire prone, there are still things that you can do to make sure that your home is safer, and those will be taken into account by your insurance company. Let's go to the next slide. The commissioner has also then made sure that if you have to go to the FAIR Plan, that your FAIR Plan does have these discounts in place for you if you have done those things. Also, the FAIR Plan has now, when Commissioner Lara came on board, the FAIR Plan was only giving coverage for homes up to 1.5 million and for businesses up to 3 million. So we have changed that. So homes are at least up to 3 million. In some areas, in some places, we need a lot more than that, but at least 3 million is available for the FAIR Plan. And for commercial policies, it's up to 20 million, which means for HOAs that might need a lot more, that they have that available. And also, if a company tells you that your wildfire risk score is too high, now you are also able to ask, how did you come across that? Why did you, why do you think that is? And then you can also appeal that. In the past, when you asked your insurance company what your wildfire risk score was, or why or how did they come about that, they will tell you that that was proprietary information. So no longer. Now you are able to ask for that, and you can appeal it because of all the work that you have done. The next slide is, we have seen that even though we have done all of those things, that is not enough, and insurance companies are still dropping people. So what we are doing is we are working to make sure that insurance is accessible, and that we are able to create a resilient market, and that we are continuing to protect our communities. On the next slide. Commissioner Lara introduced a sustainable insurance strategy, which basically is requiring insurance companies to write no less than 85% of the homes in those areas that are considered distressed, in those areas that we have seen that there's so many people going into the FAIR Plan. If if those communities, those people do their best to do the Safer from Wildfire strategy and get themselves safe, that they will then be able to get out of the FAIR Plan and into the regular market. We are also working on catastrophe modeling, making sure that basically if you do all that work, right now insurance companies are just saying entire zip codes are getting dropped. So what we're doing is with catastrophic modeling, they're able to actually look very deeply into a community, into a home, and see exactly what it is that they have done, and then price you accordingly, and also take into consideration what the whole community has done and in investments that cities and counties have done as well. We're also looking at California only reinsurance costs. That has been another issue that insurance companies have asked about, because in other states, they do count their reinsurance, which is insurance for insurance companies, into their right filings. And so we're looking at what does that mean for California only? And then we're also working on modernizing the FAIR Plan. We know that in some areas, HOAs need a lot more than $20 million coverage. They actually need $20 million per building or per structure, depending on what that is. And so we're working with a FAIR Plan on that as well. The next slide. Just wanted to show you what does that mean and what are the distressed areas. We are requesting that 85% minimum are covered in the areas where we have the highest concentration of FAIR Plan policies and wildfire risk. For those companies that are small or regional that will not be able to do that much, we are expecting that they will only have to do about a 5% growth, and then of course in commercial policies as well. So that is the expectation that we are holding insurance companies accountable to. The next slide, just wanted to let you know that if they don't do this, the department does have authority to be able to conduct exams and audit those insurance companies, making sure that they do what they say that they were going to do. And we can do rate hearings that can then adjust for refunds for people. And then, of course, we can prevent insurance companies from using catastrophe modeling if they do not do what they say they're going to do. The next slide is just wanted to let you know all of this information. It is done by not only by the work that we're doing, but when talking to experts in the fields about this, but also by meeting with people like you and hearing from you. What are the things that you are struggling with insurance? And so when we do that, that educates us as well and informs the work that we're doing. And so I appreciate the opportunity for being here, and I appreciate you, opening this up to your community so that they know who to talk to, and when they have issues that they can talk to us as well. And the next slide is our 800 number. We have our experts there that can talk to you about any type of insurance issue, not only homeowners insurance, but any type of insurance issue. We have experts there during business hours who will be able to talk to people directly. And so if they don't want to talk on the phone, we have our chat feature. We have all of that available. So you are welcome to do that. And with that, I would like to thank you for your time, and I'll open it up if you have any questions.
Thank you for your presentation. Questions, Councilman Baloo?
I would just like to know what state can do to help, homeowners or commercial building owners in this, because of course, like you said, there's a lot of non-renewal or cancellation from the insurance company lady. What I heard, especially for a town like Summer, we have a lot of old historical homes that have wood shake roofs.
Yes.
Just because of that, insurance company can cancel and not going to renew the policies unless they change the roofs, and taking how expensive it is right now to actually change the roofing. And then, so is there any way, because that's one of the major,
one of the biggest issues. Yeah, no, absolutely. So when we came up with a Safer from Wildfires framework and came up with those specific things, roofing is definitely one of those things that we want to make sure that that there's a way for us to fix that. The state has put a lot of money into grants for this kind of thing. And so we have when you are part of a Firewise community, you basically build an organization that can then apply for those funds. And so they can do that, and then you can use it, for whatever issue you might have in your local community. Some people do it to get rid of they do chipping programs where people can come in and take out the big trees, or not the big trees, but the big bushes, and get rid of all of that kind of thing. So a community, maybe those historical homes can come together and find out, what is it that they can do and then apply for those grants to see if there's a possibility for them to get that. And the expectation is that those grants are very specific to, local communities looking at very, like what is the biggest risk? And so if that is the biggest risk, then that is definitely what you would be able to use that for.
And then will homeowners be asked to, even these commercial buildings, a lot of them are being asked to, add those fire sprinklers in order to have a renewal or a more reasonable price. And then for a historical building, that's very costly, very, very costly to run those fire sprinklers in our building. So,
So those are the types of things that those funds were designated for that, for you to be able to then basically cluster together those groups of people who are dealing with that issue and be able to apply for funds to take care of that. So.
That was good. So you mentioned sounds like this is all wildfire driven, where, but to me, I've also feel like, liability, some insurance apparently they don't want to, because there's many lawsuits besides just wildfire related, losses. Sometimes it's more maybe tenant or other policy related, especially on the commercial side. Because myself, I recently, in the past year, I got 3 cancellations on the 3 commercial building, and the list they provided us to either to provide information or to provide an improvement. Sometimes it's beyond just wildfire related. So
what we have in the department is when I said, share the number that you can call, they can actually review all of this with you and can review this with the insurance company. They can be a conduit between you two, and they can actually see, is the insurance company asking you something beyond what they're allowed to do so. And so I would suggest that you call, and we have basically it's a request for assistance form that we have that allows gives us the permission to work on your behalf on that, and then we can ask those very specific questions, go through what they're asking for, and then go through what they have been allowed to do, and then figure out where is that happy medium. There are times when we can't really, make them do anything, but there are times when they will look at it and go, okay, let me, we'll put this together, because the department is regulating them, and it is something that they can actually, follow up on. That may be a little bit more than you just doing it on your own, so that would be helpful.
Question. So how much power, state government have on this insurance company? Because the renewal usually, if ever, even we get it all approved, making all the improvements, the cost actually would come up 50, 70, or 100% sometimes. And then basically there's no choices unless we go with them. Otherwise, there's no one's willing to take. That's basically like with a lot of homeowners or building owners feel like we're being left alone. It's like this is an off-beat market, and there's nothing we can do about this unless we can live without insurance, like to leave the building.
Exactly. No. So the entire time that you saw my presentation, and as I'm talking about all of this, you didn't hear me talk about affordability. You only heard me talk about availability. And basically right now, what we are trying to do is make sure that we have insurance companies that are able to do business in the state. We have to walk that fine line between making sure that consumers can pay for what they need, but then also be able to have insurance companies be able to at least be able to do business and pay their employees. So that is definitely one of the things that we're looking at, is trying to figure out how do we make this more, how do we make ourselves safer, but then also so that there's less risk, but then also make it available for insurance companies to be able to come and do business. And then the expectation is some are going to drop, as you have heard, State Farm, dropping, but then the expectation is that the other 100 or so that are doing business, then they will be able to come up and start doing that. We have seen that even like Tokyo Marine was one of those companies that basically just said, we're getting rid of our entire homeowners policies because they couldn't handle it. Mercury Insurance immediately after that called in and said, we're going to come in and work with those homeowners and take those on. We also see Allstate, as we're putting together all the catastrophe modeling, that have said that they will come in and they will start doing business and start opening up as soon as they're able to do this work. And with all of that, the expectation is that we will be done by the end of December, and expect that then insurance companies will then start buying for your business immediately after that. And some of them are already in California. In Southern California, we have AAA that is actually being opening up and doing a lot more business. So I'm telling you about that because you have heard of AAA, but we have others that are still starting to get back into the selling. So that's the expectation. So hopefully, right now we're in the middle of the crisis, but we are seeing that there is movement happening.
Of state can do a lot more, in the policy, or actually come up with a better insurance program to help homeowners, especially for historic, owner of historic homes or historical buildings. Because for a lot of Class A building, it's a lot easier to comply with all those. But for Class B, Class C buildings, it's really difficult to comply to a lot of those. What will be really costly to actually just meet those requirements. So I think
something that you feel that it is that is something that should be done, and it is not necessarily in the commissioner's purview. This might be something that you could talk to your assembly member or your senator to see if maybe there is legislation that you can look into as well. Thank you.
Yeah, I think I've done a lot of work here. I think for the fire safety, do you think it's like a lack of incentivization for the insurance companies for the high risk zones? Is it kind of the stick method that we have to go with to get them to cover?
Yeah, so that is exactly why we came up with a Safer from Wildfires, to be able to come with very specific things so that they can't say, oh, well, something else, but rather, hey, this is what we're doing here. What they had asked for was catastrophe modeling, because in the state in the past, we only used to do historical losses. We would look at the last 10 years, how much have we lost, and then look at, okay, so then the future, you could only charge this much because of what we have seen that has been lost. California has lost a lot within the last, since 2017. And so that doesn't make sense anymore. And so that expectation is that now that we are looking into catastrophe modeling, we are giving the insurance companies that they will then be able to look, then have no excuses, because they will be able to look at a home specifically. So that is that's why we're we're trying to do incentives as well.
So I just have a comment follow-up. So just we actually participated in this with a couple companies, and it's interesting that they were creating AI visual plans to help homeowners, business owners, all that stuff. End of the day, it just came to a conclusion that there was no incentivization for anybody to actually be doing this, and that insurance companies want to just get out of the areas. That's the end conclusion, which is kind of sad. That's just comment. And then the last question I have is, obviously the rates now are because the interest rates, the appraisals, all the markups, all that stuff that have happened the last 2-3 years. Following up on Councilmember Lowe's question, is there a process where this gets re-reviewed from the insurance commissioner's standpoint, where obviously the economics make sense for the insurance companies, but they don't keep rates at these rates?
Astronomical prices.
Yeah, continuously, even though their inputs are dramatically lower.
So the expectation is that as we are doing all of this, and as they are as they're looking at, because they have to provide 85% of insurance, and 85% of the areas that are high fire, that kind of thing, they have to look for homeowners that they can insure. And so the expectation is that at that point, because they're going to be looking for as many as possible, that they are going to start competing for those homes that are safe in any, in any area. And so, because this is supposed to be for the entire state as well. So right now, we are in this terrible state, in this crisis. However, as that is moving, the expectation is that they start doing this, then they start competing, and the competition at the end of the day is going to be about how much money are you going to be paying for this. And if somebody else can give you a better price, then you can jump to them. We will be reviewing these annually with the insurance companies. We will be reviewing our wildfire maps and all of that, just to make sure our insurance companies actually going after these after these homeowners that are being safe. And so as we're doing that, the expectation is that they do come down. We can't mandate insurance companies to to sell insurance to anybody. Because of Prop 103, we are not allowed to do that. And we are not allowed to tell them, if you sell, one of the biggest things that we always get is, well, if insurance companies are making so much money on auto insurance, we should tell them, you can't sell auto insurance unless you sell homeowners insurance. By law, we're not able to do that. We have actually gone to, with Commissioner Garamendi, have actually been to court on that, and have been told that we are not allowed to do that as well. When we are looking at, okay, maybe then we put homes that are highest risk in one pool and then just cover them, right? It doesn't work because what happened after the Northridge earthquake, a lot of the insurance companies said, we're not going to cover this, and they lost a lot of money, right? So the legislature came in and said, you have to, and just like they came in and did all this stuff. So insurance companies just said, then we're out completely. 95% of the insurance companies left the state at that point. So then we created the CEA, the Earthquake Authority. Right now, we only have about 3% of the state that are actually covered for earthquake insurance. So that means that people will not get that insurance. So the expectation is, if the state then decides, okay, let's put everybody that has high risk in one area so that the insurance companies don't have to cover that. At the end of the day, insurance companies are only looking to basically cover and make the money that they need to. If they can get rid of that risk, then then there we go. But then homeowners are not going to have insurance for fire, period. We will not also decide what constitutes wildfire and regular fire, because fire is fire. And if we do that, insurance companies can also easily wash their hands of it as well. So all of those things are being taken into consideration, and are very much so the things that we're trying to make sure that insurance companies don't take advantage of the homeowner. So that's why we're, everything we got to make that.
If they leave the state, can they come right back, or is there any period where
Have to apply again,
They
and
have to
they have
reapply.
to. It has to be a whole other thing.
Thank you.
Vice Mayor?
Yeah, a couple questions. Thank you, Mayor. And thank you for your presentation. I learned a lot, and I have not been down this road, thankfully yet. But I do know that a lot of residents have had their rates raised, and sometimes it's quite high, and much higher than the figures that I notice here. Like, people are getting, and if I'm correct, we're not a high risk area, nor is Los Angeles County within one of those regions that is considered the highest wildfire. So good and bad, but we're not getting as many fires, which is ultimately the good news. But at the same time, we're also not going to get 85% of the market, or people coming in, and the insurance companies, coming in and trying to get better policies. So people who've had to drop it because they can't afford, the increases were too high to begin with. So they're not going to get the benefit either of this whole process that's been set up. Not that it's, I see a lot, but it's not going to help anybody here, is my point. So aside from calling you to be their advocate, is there a cap on, or has the commissioner, is there a way to cap the max? Because some of these are quite large, but none of them are approaching, 50 or 75%. That sometimes it's astounding how much it jumps. And so, the largest ones here are like 30% or 25, but I'm not seeing even the numbers that people I'm hearing when they go to renew
Yeah.
or they get that letter.
Absolutely.
So where do they turn for those situations?
So let me answer that in two ways. One, the first question in regards to the percentage increase. This is for their entire book of business. So there may be so the increase could be, let's say 30%. There may be, they have to look at their entire book and see, okay, in these areas that are pretty safe, they're not going to have fires. We don't have any anything going on there. They might actually get a decrease. But then the areas where there are higher wildfires, they may get the biggest increases because what they're looking at is
Right, but I'm
risk.
not interested. I'm
So-
interested really focusing here in our
So that's,
community.
yes, and so what I'm explaining to you is that is the reason why the increases could be 100, 300, 500%.
For people here.
Yes, it can go, well, not necessarily for people here. It depends on, on your wildfire risk, on how much you are getting those increases. So when you hear someone say, I have had 100% increase, it is because of that. It is not necessarily about just the percentage for that they have just been approved. It is because of they have to look at their entire book of business. So that is why that percentage is greater. So I'm just explaining that. Now,
I'm not
in
sure,
the-
wait, I still don't understand. So just to be clear, we have no, let's say, and I don't know if this is true, I'm looking at you as a professional or your liaison specifically to the city of San Marino. Do we have wildfire risk in the city of San Marino that could cause 100+ raise of rates?
You have some homes that have wood shake roofs, and they might look at that as
To
wildfire
qualify
risk.
as a high wildfire risk?
They may look at that as high wildfire risk. You can look at the CAL FIRE maps in there, and they will actually show you what are the areas that have high wildfire. So
Okay.
you can put your zip code
Right,
in there,
right.
and you can see
Which
that
I
there.
know we have,
And I can't
okay,
tell you what that
Okay.
is. What I am just explaining is that that's how they look at it. And so that is why the percentage increases are higher in some areas and lower in others. It is because they're looking at the risk, their overall risk. Now, what was I apologize, what was your second question?
I guess it was more about what can people do if they're assessed at something that they don't, let's say they don't have a wood shake roof and they're not on the wildfire map that they could see, they pull it up, but they've got the renewal and the renewal comes in at 75 or 80 or 100%, like a very astronomical sum. It might be an old structure, right? But I don't know, are they factoring another, or is it just that they're bearing the cost of what you're saying, the whole pool and the book of business and that type of thing? And how is that paired?
If I may, I think a lot of it actually was what I was asking earlier is the claims the losses they had to take the last couple of years.
Right.
The asset values write-offs were way substantially higher. So a lot of it in San Marino is actually the mark of the
More-
replacement cost of the asset that they undermarked in their books previously.
Oh, I see.
And so the question was,
Valid.
that's why I asked, is there a point where this resets?
Right.
Or it gets re-reviewed, but it's mostly in our town, it's the asset values they misunderwrote.
And that has been, when we are looking at, when people, that's why I suggest that if you are getting increases that are much higher than you would expect, for you to call the department to find out, review it with them. We also have in our website, we have other resources that you can look at, and we have tips for people looking for insurance that they can see. We have a system in there where you can look at differences between insurance companies and what they can offer. So there are, we have resources there that you can look into. and
That was my
could be
follow-up.
helpful.
Is there something like when people need to go for health insurance, right? You can go to a common site. It's helpful to walk an average consumer who gets a huge increase through the process. Is there such a thing or is it more like they're going to chat or
No,
be phone
there's,
call.
we have we have our website and that has all of that information in there that you can, you can easily say, you know, homeowners. And then it has all of the different resources. And so
Okay.
there you can go, you can click into that. You can look into, you know, just all the different types of, all different types of information there. So you can do your own research there. Or, you know, like I said, you can call the department and they can walk you through it as
Okay.
well. And they can walk, but, you know, other things that you can do.
Okay, so that's the best way to refer somebody who gets such a letter or that
Yes.
type of thing. Okay, thank you.
Okay, thank you for your presentation. I just have a question. I don't know if you mentioned it. I just want to know if San Marino is certified as a fire risk reduction community.
You have to apply for that, and that comes up every 2 years. And so there's a whole application process. So if you are not aware, that would be your fire department, you would have to work with your fire department and see if that is something that you, that either you are, or if you need to apply for it. But if it's not part of your system, then you most likely are not. Or if you're not aware, I don't know.
Can you please look into that or?
Yeah.
Okay.
Public and for you, council. The city of San Marino does not lie within the state's high fire hazard severity zone. As was pointed out, though, an insurer, well, they're not writing policies here anyway, but new policies are two in town, Allstate and State Farm. But they will come to your house, and we do have lots of wood shake houses, and they may identify your house, your home, as a high risk, separate from fuel beds, separate from wildfire risk. You have a risky house, and that may cause your increase because they're able to do this now by visits. They're able to do it by satellite. They're able to do it by a number of means to do an assessment of your home. But we are not in the high fire hazard severity zone. And we do have Class A roofs as part of our building code. So we do have a lot of things in place, including our fuel management program that's in our areas that do have more vegetation.
Thank you. Okay, oh yeah, one more question. I didn't see AARP on there. Are they part of the insurance companies too? CARP is actually a system. We have an auto insurance, that's for auto insurance. And so they manage our auto insurance program, our low-cost auto insurance program. And what that program is if you have a car that is worth $25,000 or less, if you are a particular income, you can actually apply for that program. And so, and what that is only liability it's only liability, and it is only, and it is actually even smaller numbers than what is expected from the state. So you can actually, you know, and that is for people who would otherwise be driving without insurance because they wouldn't be able to afford it. Thank you.
And
More questions?
thank you very much for your time. I have my card, and I also have some information here so that you have already, but on the Safer from Wildfires and also the sustainable insurance strategy. We will leave it here so that the public can just pick it up. if
I'm
they want
sorry.
to.
Do we have any public comments or questions?
We don't.
We don't, okay. Oh, one more. Is it possible to have that presentation, emailed to us?
Yes,
Okay.
I emailed it to your team, so you should have it.
Can you please
and they
email
can-
to all of us? Great. And then put it on our website too. That would be great. All right. Thank you, Deputy Commissioner.
Thank you. It's a pleasure.
You.